The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And we have the volatility continuing here. So we talked a little bit yesterday. Just to get right into it, we're going to talk about China and the Chinese currency. But just to go ahead and get right into the meat of it, the S&Ps, we talked a little bit yesterday about this situation. I'm going to go, I was trying to find stocks earlier that were showing themselves as relatively strong stocks, ones to hide in. We talked about Walmart a little bit yesterday. We're going to get into that, and it's acting very well this morning, actually, on a relative scale. But as we look at our breadth situation, we had noticed some yellow, more populated areas of our speed dial here, and that we had 109 stocks on the close yesterday. Attempted to show new profiles on our short term. That was a little bit of a hint to me, disregarding super impacting news like we have fundamentally right now with what's going on in China, and that's freaking some of our markets out, and Europe. But they actually had some good numbers out of Europe. So the Chinese thing went straight up. Our markets kind of liked it. It's a super volatile situation we're going to get into. But on our S&Ps, we had a little bit of a hint of a new base being put in on a short term. That was obviously destroyed this morning. So I was actually hoping to wake up early this morning and actually maybe find some opportunities to go long. I'm not a big fan of going overnight trades right now unless you can put stops in all night long. But that was a little bit of an indication. These are 7% move down in an index and shutting trading off I wouldn't call that a regular trading day. So when these types of things happen, all bets are off on some of the regular path indicators that we use. But that indication to me was, I was kind of hoping to wake up this morning and start looking to nibble on some areas actually for a little bit of a trading bounce. But obviously we've got a huge gap down, and thank goodness. We always talk about not exactly being a long-term investor and buying indices or shorting indices and shorting more, buying more, and becoming attached to things. These are prime examples of why you watch TFNN and why you get some different perspective, in my opinion, get some different perspectives on things, and be able to slow your trading down and hopefully make very concrete risk reward decisions are based on risk rewards. And this is a prime example of one of them. So I'm exactly not. I want to see the market open. And again, we're going to talk about the relativity towards China in just a second, because when you step back and look at this, things aren't that bad. We've got a slowdown, in my opinion, fundamentally speaking. But we're just getting below unfair lows for the first time in a long time on our weekly 1953.54. We talked about that yesterday. We're just going to have to get back above there. Right now, it's kind of a waiting game to start nibbling on the long side, and I'm going to want to start seeing some of the components in the S&P put in that base, at least on a short term. Remember, the VIX is high. We're going to kind of scale down to lower term breadth information, and we're going to look for those green shoots. Now, we're also going to look for those green shoots on, if we go to our scanner and look at our index grid. Oh, God, we're not seeing charts here. Ooh. Sorry about that, guys. Let me see if I can fix that. I just saw that. No, Peak D, just read your comment there. I wasn't nibbling on the close yesterday. It was a little bit of an indication that a lot of the stocks in the S&P were trying to put in a demand area floor. Remember, in our scanner, when we look at this, You guys seeing charts now? So when we look at this, an indication that we really can't track historically are these new profiles attempting to appear. If you see that, we saw this at 109 yesterday. Obviously, this morning we're going to have to wait until some of these instruments open. But that was a little bit of a hint on a short term that, you know what, we're having some basing action here. Now, those can disappear. That's why we can't track them historically, but it's an indication in itself. And again, this is kind of I hate to use the word epic. I think it's one of the more overused words in the English language lately. But this is an epic situation. 7% move in an index and halt trading in China is weird to say the least, and different to say the least. So 1953, we talked about yesterday. 1994 was a big number, and then we also talked yesterday on Tom's show, and these are based right off things in the scanner. But I'm going to go back into my futures area here, and I'm going to go to my where's it at? There's my E-minis. Now this is pulling real time here, so. And if you look at this, you look at our landscape chart, this is the level of the market. There's 1945 short term. There's 1934. Remember, this is just showing all time frames. We lost the chart again. Is that? No, got it now. Okay. All right. These are showing all time frames, weekly, daily, 240, 60, and the balanced areas. So right now, we're within a balanced area, even on the short term 60. So I'm going to go in here and I'm just going to look at my grid, and I'm going to see that, we've been in a defined trend without any breaking of that trend on 60s for 36 straight 60-minute bars, and that's why that arrow down is sitting there like that. Now, what's going on here? Why is it showing bottom on our grid? And again, these are just kind of notes to yourself when you look at broad stop indices and instruments in here. These are just a little bit of a primer. We're within a 10% noise area below that 1954. That's why it's showing bottom and flashing red. It's saying we're below that balanced area, but we're within a 10% variance of the entire 1950 or 2102 minus 1953 times 10%, and that's still in that range. So that's why it's showing bottom there. We want to get back above there and see that thing turn gray, in my opinion, to start looking at this from the long side. But again, we're going to talk about China and see what the deal is with that first. By the way, we're going to talk about Walmart, and do not go to Walmart and get a haircut like I did last night. You'll look like Uncle Charlie on My Three Sons pretty quickly. So we give hints, and helpful information on this show. That's one of them. We lost the chart again. There you go. Okie doke. All right. A lot of the people watching this show must go to Walmart and get a haircut. Okay, we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We were getting out of the awful conversation that I was presenting to you on the haircut at Walmart, and the alternative is the Floby. So I was just showing that in the den there. What happened to those things? The FDA ruled against them, or what? There it is. I spelled it wrong. Floby. Oh God, you got to laugh a little bit on mornings like today. All righty. Okay, so PT had a good question. If you watch this show, and by the way, I'm looking across the globe, the only thing even remotely hanging in there is this cold cap Columbia, but they haven't opened stocks over there yet. Columbia's, I think, on Central Time Zone for us, so that's a different deal. It'll probably look ugly like the rest of it here, but this is the globe. And I mean, you see these deep reds. This is for real. It's not interesting. You guys are well aware of that. But let's go back to our long-term charts on the Shanghai for just a second. Then we're going to peak T. We're going to hit that S&P question right after this. But I wanted to get this out of the way. If you go back, this is a Shanghai cash index chart. So, and this is a weekly. So you've seen these types of charts before. If you've been sitting in front of a desk looking at screens for a while, you've done your research and you've noticed some situations that have happened. A lot of times you see these situations, and Tom may laugh at this if he's listening. You'll see these situations with penny stocks that are being pumped and dumped. All right. This is not the penny stock. This is the Shanghai. All right. This is the Chinese stock market. But as we look at this, it has the same kind of connotations of, things that go up and get super violent. I mean, you can play a very risky game. Just people that short penny stocks that are going up like that, it's not like that's a mystery, by the way. There's a lot of people going, oh, okay, we've seen this movie before. This thing's ultimately going to come down because the price action's doing this Shanghai type move. They start shorting it. They don't know where to short it, but they start shorting it, and then they get their head taken off because it continues to go higher because everybody in the world's starting to short it, and they're having to cover. All right. Now, this may have been the case, some of this in the Shanghai, as it kind of continued to go higher. It obviously got a lot of Chinese citizens involved with this bubble, if you will, along the way up, because they were allowing innovative entry hurdles to be basically dismantled. I mean, borrowing money, giving super high margin capabilities. A lot of Chinese, if you go back and look on the internet, you'll see a lot of Chinese citizens have just basically lost everything. I mean, lost family farms that have been in the family since the Ming Dynasty or whatever. I mean, it was a horror show for a lot of folks. So ultimately, when all these shorts are out and all the people have stopped buying and these crazy moves up, this is the type of actions you get. But right now, this has not severely, and I'm making a relevance towards the S&P market here. This has not really severely affected the S&P as it's climbed up, or it's fallen to hell in a handbasket here. I mean, if you look at the S&Ps, we are just showing one hint of being below a balanced area in the long term. And what are we off? What's 1950 from 2100? What is that? 6 or 7% from all-time highs. I mean, we haven't even had a normal correction yet. So still, and we could have that. But right now, what I'm trying to say is U.S. stock market didn't react violently on the way up here. It didn't really react violently on the way down. So I'm looking at this as just trading opportunities. I don't see, I know that the economy's kind of been in stagnation, but that's been the case in low rates, and low rates fixes a lot of that stagnation. So you got to tug a war with a lot of relevant instruments out there between the dollar, the bonds, the currency situation overseas, gold, which is just started to show some hints of having legs. But again, gold is coming up. We talked about that 1090 area yesterday, but you got even a heavier lid at 1104 on gold, and we're going to talk about that. We're reaching that right now, and you got to pay attention to that. That's a long-term inflection point. I didn't want to miss a trading opportunity around 1090 on that, but we're going to talk about that in a little bit. So as we look at the Shanghai, look at the action, look at the government intervention, just take a look back at the S&Ps on where they were back in, January 2015. I mean, these are, in my opinion, some overreactions to some volatility in Shanghai, and we may have some par for the course opportunities in the S&Ps to trade inflection points here. Now, what's the safe way to trade these inflection points? In my opinion, right now, you can't really dive into this. And Peak D was talking about, Peak D was asking, he's been kind of looking at opportunities to sell. Now, in the long term, on our breadth situations, we've been pretty negative since the first of the year. That's absolutely correct. And we've had a kind of a mixed bag. But when we on the daily, and we have a lot of automated systems based on the daily, when this, the middle ground kept going up, and at the same time it started crossing over, then it started evaporating a little bit. We talked the other day about trying to sell long-term inflection points at 2025. That wasn't reached. I missed that opportunity, and I'm kicking myself about it because it never got there. But, we're just trying to play odds. And yesterday, all I was saying, and we've obviously had our daily and weekly breadth get into negative territory, and we've had some overextensions at the same time on our lower term breadth dials. But yesterday, what I was saying is we had kind of a weird situation that was going on to pay attention to, that some new demand areas were being put in on the short term. And we had actually had some pretty, as Tucker was saying at one point, some back to truck up opportunities as we had gotten into an overextended above 70%. Again, these are some epic moves overseas. I was just saying that was a little bit of an indication. I didn't, overnight, I'm not a big fan of just kind of piling into something. So it's something that was happening on the close. which was nice to see. And then if you're trading short term, you really do want to see the breadth change to positive on some of these lower term time frames. Remember that the VIX is getting relatively high on a relative scale, and we've got to be able to kind of scale down into lower term time frames for those opportunities to trade on. Let me read the den really quick here. Getting some Floby comments here. Yeah, we're off about 7% on the Dow. Thanks, Duffy. Okay. We'll be right back, guys, and I'll cover some of that S&P question again, Peak T.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And we were again talking about the S&Ps. Let me get them. The cool thing about the scanner is trading the S&Ps is, I mean, if it was so easy, everybody would be doing it and everybody would be ringing the register all the time trading the S&Ps. It's a relatively difficult instrument to trade, and a lot of people get laser focused on it when they probably shouldn't. I mean, the thing we do on this show all the time is we try to keep throwing a lot of many different ideas out there with different instruments. I try to give the barometer of the main things I think that are going to kind of affect broad markets in general. But it's in my opinion, with the way I conduct myself in front of these screens, it's not a good idea for me to get laser focused and only trade one instrument. So that's why the S&Ps are just one part of the equation of trading to me. You want to spread the risk out. You can't, in statistics, you can't really take a data sample that's valid from one little tick of data. All right, you need to kind of, in my opinion, have a larger data sample to really pull your success rate possibilities out of, or your failure rate. So again, in my opinion, you might not want to just completely stay laser focused on the S&P all the time. That's why I look at the scanner, and we try to find, it's sometimes it's a lot easier to try to find anomalies and things showing themselves early, and that's what we do with the scanner. So, I was looking at, no mystery to anybody, Walmart holding up pretty good. Dollar Tree, everybody's thinking, everybody's only going to have $1 to spend on the things in Dollar Tree stores. But here we go. I mean, this is a strong trend up. I mean, we've actually got a feature in here called uptrend support. So these are stocks that have been in an uptrend that are just coming back down to support. So, it provides a little bit of a landscape relative to profiles that allows you to find some different opportunities and, again, spread the risk out. And I was looking at Dollar Tree on here, and this, if you're short this thing, you got to be somewhat concerned. I mean, this morning, it's almost like got Teflon on it. It's not even gapping down. And you've got a new fence here at 79.41 gap. Again, kind of a breakout situation. And if you're looking at Walmart, by the way, on this same token and same note, Walmart's gapping down to 62.60. So let me get this where you can see it. So again, the breakout, the pullback to support, this was kind of former resistance, now support. This is a decent little situation here on a day like today, showing itself, giving you a chance, in my opinion, to pick this thing up. Now, Netflix, man, and Netflix is opening, let's see, is it opening up? No. It's barely opening down 3 points. And we're actually not even close to the unfair highs. This is one, again, like, you're short Netflix right now, you're playing with fire, in my opinion. But if you're short and you're seeing what the market's doing right now, and this thing's not caving in, and we're kind of we're using this unfair high on the weekly as support, you got to look at this as a long opportunity still. I mean, this is not a short situation. Okay, so yeah, I mean, I think Walmart's giving you an opportunity here, actually. And if the market rallies, what's going to happen is stocks that are, the theory is if stocks that are hanging in there, like a Walmart, kind of giving you a sympathy gap down a little bit here, those are the stocks that are going to be, wow, there's no sellers. Those are the stocks that continue to have buyers in them. So Tiffany's, let's take a look at Tiffany's, Peak D. Yeah, this is just ugly all the way around. But and that's the weekly. This is the daily. Yeah, Tiffany's is gapping down. But see, this is one where it's gapping down, but you don't have anything to hang on to, and it's been a stock that's been relatively weak. Let's see here. Let's see. Here we go. Yeah, I mean, Facebook, we talked about that. Let's see. Okay, so Facebook gapping down to 100.5. And what's happening here is you got a stock that, 9900. We talked about this the other day, that if we can get back down to 100, this is probably something that can be scooped up. You've got a former unfair high at 99.24 on a market that's coming down significantly this morning. This is one that's basically just giving you a chance to pick it up on support, and it's a strong stock in a weak market without question. And this is one that I don't know if anybody in their right mind would be short this stock right now. Therefore, you kind of got to go with the crowd on this one, and it's showing itself constantly. Let's take a look at notes. That's a great call, Jim. Facebook to point that out. I don't point that out enough. It's, on the other hand, what was that doing? I just went past the treasuries. Here we go. We talked about taking off some weight around 126, 23, 24. The notes aren't exactly acting as strong as I'd like to see them on a situation like this. And let's go back to the S&Ps. We're down 46. We've come down significantly, and we're gapping down. This is our daily on the futures. I want to see this thing get back above 1953 and start hitting the long gas pedal myself. I think we could have some people picking this up, and I think the Chinese market might be a little overblown on the downside right now. So that's my take on it. And I think the bonds are, the reason I'm saying that is I think the bonds and notes are kind of, look at this. We're just rallying back up on a long term to 127.14. We've hit it this morning almost by 4 ticks, and we backed off a half a handle here. So I'm not a huge fan of being long or short bonds or notes right now, and I think the notes are kind of saying, you know what, not that big of a deal yet, and that makes me think that the S&Ps could have a little bit of a rally here. Gold, and by the same token, gold is just really rallying up into that long-term unfair high. And I hate to say if, but that 1090 on gold, I took a shot at it actually. I got stopped out. We got another inflection point that's even more powerful on the short side around 1104. So that's kind of where we're sitting. And gold's got something to contend with right there. And if you've been long, that's awesome. I know some people in Den have probably been long, but this is a major takeout point in my opinion with the stuff that we use. So, and I'll show you here on the scanner. We'll go into the futures section, and you'll see that top 10 right there. So we're sitting right at the top of a long-term inflection point. That arrow's down. We've been in a defined downtrend. Even though we've got green across the board, these take precedence. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. A couple of questions and then I'll answer. I'm kind of happy with these charts right now. I mean, here's gold, here's the weekly, here's where we're at. They're working real time, as you can see, Tucker, and anybody else, and we'll continue to add functionality to the charts. But I just want to make sure that, I mean, when you create a ticker plant for a charting package, there's a lot of little things going on. And the currencies have been crazy lately, which is that database is also dealing with that. So when we look at these things, we just don't want to, sorry that they're taking this long. We just want to make sure that they're as right as rain. So you guys I want you to be able to trade by these charts. So that's kind of where I'm at with them. And we were fixing little bitty things here and there in the back end. There's not really anything to fix on the front anymore, Tucker. But as you can see, they're pretty cool, in my opinion. I mean, this is, by the way, have you guys looked at the price of corn and wheat lately? You can buy a bushel of wheat for $4 and some change, and you got to go pay $4 and some change or actually $5 and some change for a loaf of bread at Whole Foods. Is that crazy? I don't get that. Tom O'Brien, if you're listening to this, you're a big fan of Whole Foods. Buy a bushel of wheat for $4.50. Whole Foods loaf of bread's $5.50. I just don't get how or why that whole business model for that company's in this time. Let's just look at that's Wells Fargo. What is Whole Foods? WFM? Is it Whole Foods Market? Yeah. Let's see how this little turkey's doing. All right. Well, it definitely broke stride. And we had that little move up, and we haven't even come back and retested this 31 on Whole Foods. But, Daly's kind of been regulating it up. I'm not a big fan of buying this company, obviously, especially after what I just said, especially in these times. And we could have some people pulling back on their pocketbooks based on market volatility. I mean, this obviously freaks out long-term investors. For real, traders who are sitting in front of the screens, you got to embrace this type of volatility. We talk about trying to mitigate the risk with some of the things in the scanner and trying to find anomalies going on. But a lot of long-term investors may, no mystery to anybody, may tighten up the pocketbook just from the volatility alone. And Whole Foods is way up there. Let's see. Let me read the DIN here really quick. Let's see. Yeah, somebody in the DIN saying a bushel of wheat produces 90 loaves of bread. That's not a bad margin. The farmer goes through, it kills me. I talked about this after Thanksgiving, after speaking to one of my uncles who's my brother-in-law basically farms about 1,000 acres, which is not that big of a deal when you go out Midwest. That's actually not a big tract of land. It's pretty big for North Carolina. But they go through all that trouble for such a low margin per acre. And then, 90 loaves of bread made off of 1 bushel of wheat. You figure out the margin there. I mean, that's basically $500 a bushel margin. It's incredible. We ought to start making bread. Tom, can I leave this post and just start making bread? Can I do that? And of course, selling it. All right, guys, let's get back to business here. Some of the questions, and you wonder why Panera Bread. Let's just look at that one here while we're going off on a complete tangent. Here we go. They love cheap wheat. That was the chart. So what we want to also look at here, I want to take a look at Chipotle. Here we go. Man, did that just... Let's get these things painted here. Obviously, some more bad news on this morning. In addition to the market gapping down, we're trading 414. We closed at 426. So, people always ask, stocks like this or any stocks that are going down. I get emails like, "Is it time to buy? Is it time to buy?" My attitude is if it's time to buy something, you want to buy stocks that are hanging in there. You can pick up some stocks on sale sometimes, but there's just nothing down here to even cling on to with Chipotle, and the news keeps coming out. When we get a new demand area here, it could be a chance and a time to nibble. But think about this. Let's just think of it this way. Last breakdown was at around 710. All right. Let's just say you saved yourself there. And then you tried it again. It's 554. All right. Boom. Stop out. Try it again. Think about the guys who have held onto this from 700, even 750. This is what I'm talking about, is using TFNN, using some information off the network, the Steve Rhodes of the world, the Larrys of the world, the David Whites, the Andy Heck, Daryl Martin, Basil. I hope I haven't left anybody out. Tom O'Brien. I always leave him last because he's the best. That's why you're last, Tom. Seriously, every time I listen to Tom's show, by the way, I always pick up something new. He's a book of knowledge when it comes to this, and you want to have a pretty broad perspective on things, and you always want to try to keep it simple. Simple is always good, but you want to try to be aware of different things out there in the marketplace that can affect some of the instruments that you're trading that don't necessarily show up on the charts all the time. And I mean, Tom's vast knowledge is very educational. Here we go. Let's take a look at the dollar. This has been something that's pulled back a little bit, but I'm still looking at this as a long-term trade up, safety trade with stops below 98 on the dollar. Let's take a look at Exxon. Let's see. What am I? Let's see here. All right, let's take a look at some oil stocks. I think that's what I'm reading. No? Anyway, we're going to take a look at some oil stocks. Let's go into the ETFs here. Obviously, there's not a lot hanging in there, but we talked about the utilities yesterday, so I want to drill down into this. This is kind of the anti-sector. You guys are aware of that. Days like today, I don't know if I'd be buying utilities. If we can get a rally back up, that might not be the best bang for your buck. So what I want to show here is, we're going to take a look at crude oil, but I want to look at some crude oil stocks. So let's take our energy stocks. Let's take a look at the XLE first. We got about 10 seconds for the break. We're gapping down to 56 this morning. Here's our weekly. And this is kind of going into a whole new territory for this thing. And we're going to hit crude oil when we get back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I think we've got just an unknown person out in the middle of nowhere. I think his name's Larry. Larry, you there?
Yeah, I'm definitely unknown, John. I don't even know who I am myself sometimes. Listen, the only reason I called, I was listening to your thing on the fair value of the gold up there at 1104, and I've been friendly to this all week, and I'm out now. The reason for it is I like that number you had up there, plus the fact that silver hasn't even taken out yesterday's high yet.
Right.
You know, and we've taken out the December highs in gold. There's something not right. When these don't go together, I get scared. So I said, I'll let them have the last $50 if it goes, but I'm just going to stand aside. So I just want to let you know that, and I hope to be back on Monday because I still feel like dog do.
Well, yeah, you sound a little different. I'll just say that. But yeah, I mean, I listen. I have your show in the background all the time. The next hour of when I'm working, I thoroughly enjoy it. This is Larry Pesavento. If you guys can't recognize his voice right now, and I was just joking about him being unknown. Yeah, it's it's a thrill to listen to be honest with you. It's a great show. Really. Like I can't say it any other way.
What are you smoking down there in those hills?
No, it's a great show. I mean, like I get a different perspective on things from what I normally look at, and that's really, really good.
I understand. Most of the people take the other sides of the things that I have, and I'm happy for them.
I know that feeling.
Listen, Happy New Year to you, John. It's good to have you back. And you're
Thanks for the input, and I hope you feel better.
I will. All right. See you later. Bye-bye.
Okay. Bye. Wow. That's an honor for Larry to call into this show. Yeah, I mean, what he said's true. I mean, we talked about silver just not being the one to really pile into. It's just showing itself. It's the, obviously the dog of the gold and silver group, but that is concerning. And to be honest with you, we've talked about gold, as Larry's kind of said, this is a little freaky or freakish, I guess. It just should have had a more violent reaction to what's going on in the world also, and that disconnect is concerning between gold and silver. And we've had a little bit of a run up here, but 1104 is I don't know if that matches his Fibonacci numbers. I haven't looked at that, but if it does, you kind of got possibly a dual confirmation, however you want to look at it. If that's the case, that you always look in trading for more things to line up in your favor, and actually slow trading down. We talk about that a lot. I mean, trading extremely actively has statistically been proven not very good for someone's brokerage account, except for the broker, of course. We're not here to bash brokers, but it's a statistical fact. So let's take a look at crude oil really quick. I hope I said that right, Al. Here's the long term. We've talked about staying away from the longs on this thing completely and selling breakdowns. This is, again, we talked yesterday about getting some momentum here, and there's nothing to hang on to. There's really no turnaround features involved at this state or at this stage. Here's the 240s, just nothing down here. But if this thing starts to get some legs, some basing, new profiles start to happen on any of these time frames, or any hints of new profiles starting to happen, the U.S. stock market might enjoy that a little bit. I mean, you've got so many things that are happening in the wrong direction for the market to go up, and it's not exactly coming off that much. As someone stated earlier in the day, we've got a 7% pullback from all-time highs right now. Not terribly bad for what's going on right now. Guys, Larry's not going to be next. I might fill in for him, so stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.